The monthly Amfi data is out, and while we spoke to Swarup Mohanty to get a sense of what he was saying, it's our monthly appointment with Mr. N.S. Venkatesh of Amfi to speak about his thoughts on what he makes of the data. Good having you, Mr. Venkatesh. Thanks so much for joining in. There's a good and a bad out here. Can I start with the good first? Um,
Yeah,
is it heartening to see the SIP flows still sustaining? Because I know the narrative is that they've slipped from 7,900, but at 7,800 crores, it's holding out pretty well compared to the kind of outflows that we're seeing from the lump sums.
I agree with you. That is the SIP number is showing robust flows, considering the circumstances under which the country is going through in a pandemic sort of a situation. The retail is showing its faith in the mutual fund industry, and they are continuing to remain invested through the SIP route. So that's why around 7,830 crores, though marginally lower than last month. Last month it was 7,980 crores, so around 150 crores lower. But still it is holding on, and they are reposing their faith and trust. The retail is reposing their faith and trust in the mutual fund industry.
What's the aggregation of views around the kind of slump and outflows that we're seeing in the lump sums? I mean, what are mutual fund houses talking about, Mr. Venkatesh? What is it that you are gathering? Because it's now not a 1 month phenomenon.
No, essentially, if you look at the equity is showing a large outflow. Then you are also seeing
Yes.
outflows. You are also seeing outflows in the arbitrage fund and the balance funds, for that matter. These are the two major segments where the money has gone out. Whereas on the debt side, at least there is positiveness. Debt side, you are getting money in. On the equity side, I would say partly it could be due to profit booking, which should have happened, and partly people are maybe putting out some money to stay on the sidelines and come back and reinvest. But I would always say that mutual fund is not a vehicle for you to trade. Mutual fund is a vehicle for long-term investment and goal-based investment. And if you are invested, you should remain invested.
Yeah, sure. But some of the industry spokespeople that I've been talking to off air and off air, Mr. Venkatesh, do point towards them learning from their agencies that now there is this bit of this disillusionment about the long-term returns. I know the education has been good about staying put, etc. But are customers talking about them not getting returns over the last 3 months, 6 months, 1 year on average, or 2 years, 5 years, etc. on average, and therefore lump sums are being moved out of?
No, I think there is some money that is being withdrawn in that fashion. But essentially, I think more education has to happen from our side. More education has to happen because we have seen that equity investments over a longer period of 5 to 7 years will definitely give you a better return than any other instrument. So to that much extent, we should tell that this is a cycle through which the market is going, because of which negative returns are being there, because they had entered at a higher pace, and now it's at a lower pace, so negative returns are happening. But I would say that if they remain invested, then they will tend to earn positive returns.
Hmm. Okay, I was just looking at the data too, Mr. Venkatesh, and I looked at the non-equity side. It seems a lot of money is going into the short-term and on the debt side. What is the nature of this money? Is it corporate India which has gotten some monies and putting it in a temporary fashion? Any thoughts? Because it is short. It is certainly in the short-term debt category.
That's right. Even in the short term and even in corporate bond fund, also you saw some money coming in. So essentially, I would say that it's a mixture of high net worth individuals and the little bit of the corporates coming in and putting money there. Essentially, with a benign interest rate environment uh, as of now, and also going ahead with RBI coming out with its monetary policy saying that they have the tools, enough tools to manage the interest rate scenario. They are keeping the powder dry, and they will not hesitate in cutting the rates if it is required. I think there's an accommodative stance to the central bank. So to that much extent, it's a benign interest rate environment, and that's why I think people have come and put money into the short-term funds and the corporate bond fund.
Okay, just one final question, Mr. Venkatesh, a bit of clarity. So you are saying that in this short-term and corporate bond funds, it's not necessarily only large corporates. A larger portion is actually HNIs which have done.
Yeah, it could be a chance.
Okay. Fair call. Mr. Venkatesh, much appreciate you taking the time out and speaking to us. And of course, thanks for keeping us updated with the monthly developments in the mutual fund space.
Thank you. Thank you so much.
And viewers, thanks for tuning into this conversation.